Thanks, everyone, for waking up so early. It's early for me, at least. Crossing the chasm, right? Probably each one of you have your own personal and professional chasm that you have to cross, and we're going to be diving into that with our excellent panelists. I'll go through them real quick. We have Richard Burton. He's the CEO of Balance.io. Gregory DiPrisco, head of business development at MakerDAO. We have Clay Robbins, who is the head of production at ZeroX.
Growth ecosystem.
Growth ecosystem. He wears many hats. And then we have Zan Ditkoff, who's the production partner at Blockstack. So a great lineup. I guess let's dive right into it, folks. What is at each of your firms, right? You run the gamut from algorithmic stablecoin to regular stablecoin to decentralized exchange protocol. We'll start with you, Greg, since I messed up what your company does. What's your chasm? Obviously marketing, because I didn't know exactly what it was. No, just a joke. What's your chasm?
Does this work, by the way?
I don't gotta push that button, I think.
Oh, I'm just going to use this. Our chasm is basically that DAI. I'm not sure how familiar everybody is with the product, but DAI is our stablecoin. It's a digital dollar that you can transfer in custody without the use of a financial intermediary. It is created through decentralized lending, so you can take a loan against your own assets. But our chasm is getting this from the blockchain into the real world. Because until it's useful in the real world, it pretty much exists in a vacuum, which is the Ethereum blockchain.
Yeah, I think for us, it's thinking carefully about why somebody would actually use any of these tools. I've got 10 wallets on my phone, and I rarely use any of them. And that's because all they do is kind of store and send tokens, and most tokens should be worth zero. So that's not a compelling use case. And it wasn't until I started using some of the financial protocols on top of Ethereum and jumping through a whole bunch of hoops that I started to kind of see the magic of the system coming to life. And so our goal, hashtag thought leader, there we go. All right, so we're just trying to find use cases that regular people would find compelling, and crucially, opportunities that they cannot get in the traditional financial system should be available because of Ethereum.
So Blockstack is a decentralized network and a developer toolkit that allows folks to build applications very easily where users own their identity and data. With that background, we have two related chasms, and I would say we're in the middle of crossing the first one, which is getting mainstream adoption from developers, getting a kind of a self-sustaining feedback loop there where folks are organically coming to us and building on us because of the value that the primitives that our tech enables for them give them. The second is this end user chasm, and I think this is more what we're all kind of facing today in different ways, shapes, and forms. And that's, we're starting to see application development and we're starting to see some exciting growth there. But how do you start providing value to an end user such that you start getting mainstream adoption of these applications?
Yeah, so for ZeroX, pretty similar to Blockstack, we are a decentralized exchange protocol built on top of Ethereum, which in plain English means we build the infrastructure that allows developers to easily add exchange functionality to their products and services. And it allows users to trade in a peer-to-peer manner without a trusted intermediary in between. And so when I think about the chasms that we need to cross, it's very similar to Blockstack in that, one, we're a developer platform first, so primarily we need to build the tooling and services and documentation that allows developers to easily access ZeroX and build with it so that they can grow the supply side of the marketplace of different assets that can be exchanged. I think the second is end users, which is kind of interesting from the developer platform perspective in that at the protocol level, we always have to think about how far up the stack do we need to build and what are we building at the protocol level that bubbles up to the end user experience. And then I think the third is, frankly, regulatory. We need to do a great job of educating regulators on the space and working with them to create things like Harbor was just talking about, permission environments for folks to access assets that couldn't have existed before and ultimately exchange those assets.
Clay, that's a good point. We were talking about it last night at the dinner. I'm surprised no one else brought it up. But obviously, when you look at the landscape, right, you have, similar types of firms, right, getting nasty grams by the SEC. You think of like Ether Delta, you think of Basis, which claimed regulatory headwinds. How big of a chasm is the regulatory environment? And to our conversation last night, Clay, if U.S. regulators don't allow some sort of sandbox potentially, is that innovation potentially going to go somewhere else where they will allow folks to trial and error?
Yeah. Is my mic on? Okay.
I think so.
Cool.
Yeah.
I think that the macro risk that the U.S. runs in not taking a nuanced approach to regulation and allowing for something like a sandbox or parallel innovative development environment to exist is that there is migration to other jurisdictions, because I think it's safe to say that this stuff is here to stay. And if you try to almost murder it in its cradle, the migration will certainly happen.
Yeah, go ahead.
Another area that's kind of interesting is the bridge between the non-custodial and custodial products. So Coinbase holds your private keys, and so it's a custodial service, and it's effectively like a bank. And they are kind of exposed, therefore, to a lot more regulatory scrutiny, because if they get hacked, a lot of customers are going to lose their funds. By way of contrast, a product like Abra is a non-custodial service where if you lose your private keys, you lose access to your money. And that's true for many of the typical Ethereum wallets. And as a result, Abra has been able to kind of scale up to over 100 countries with relative ease, because there's a kind of lot of permission given when people are responsible for their own funds. And so I think this is a kind of interesting divide, and we're going to see the lines blurred as more interesting options emerge between custody and self-recovery and other kinds of mechanisms. So I care an awful lot about how to work with regulators well, but I'm optimistic that by remaining as a non-custodial product for the time being, that we can move much more quickly.
That's an interesting point that you brought up, Abra, because they just rolled out the part of their business that's going to allow folks to synthetically sort of trade stocks, ETFs, et cetera. A lot of the folks I talk to, former SEC guys, say, listen, this is an equity derivative. You can call it whatever you want. You can say it's non-custodial, but you're promising investors that you're going to give them exposure to a U.S. stock. And so if there was an instance in which the SEC said, this isn't kosher, we're not going to allow this, or you have to operate outside this jurisdiction, does that put the United States in jeopardy to hinder, right, the development of open finance? And I'll go to you, Greg. How much of a concern is that to you, based off the job you're doing? Yeah, sure.
Yeah, I don't think the little mic works. Obviously regulation is something that we are very, very much concerned with, because it really does encircle our entire business model. You can probably find something in Maker that every single regulator wants to touch. But, I think the important part...
That's scary.
Yeah, it's scary, but at the same time, it's, there's two ways to do this. You can take the Uber model, which is just grow so big and then, try and punch them in the face, as Richard would say. Or you could get ahead of it and actually have conversations with these people, and that's what we're doing. So, we are in constant touch with regulators, trying to get them to understand the product and get them to understand that it actually isn't a threat to their jurisdiction.
Zan, are you taking the punch in the face approach or something else?
No, I think because we are really focused more on, at least right now, the types of applications we're all used to using on the web and mobile, we're not really super in this space where it's not affecting us a ton right now. The one thing that Richard said that is something we are very focused on, and I think it's a very interesting thing to think about in terms of what worlds could potentially exist, and that's this blurring of custodial and non-custodial. And if that can be a tool to help us cross the chasm. What I mean by that is, I think all of us up here on stage are big believers in having custody of our own assets. As we start to cross this chasm, as folks like my parents maybe start to use either applications enabled by our technology or financial products, they probably are not going to want or need that level of ownership. And there's going to be a blurring potentially, but it's still a 0 to 1 improvement in what we're doing there.
If there's anyone out in the audience who wants an idea for a protocol, please start exploring a password reset protocol. I've got a design for it in my mind, and I'm just really busy, and I can't build that. And I really think it could be one of the most valuable pieces of infrastructure you could have in the world. If you could suddenly pick up your phone, walk around with it, type a few words out, speak to it, and it could unlock your private keys on a network rather than with Coinbase. Like if it could be run that way, then I think we'd be in a really, really positive world where people can kind of both have the benefits of self-custody and also the opportunities for self-recovery.
Yeah, but also to speak to the chasm once again, it's I think a lot of people in this room are very into self-custody, but most people in the world are not, like Richard pointed out, and most people actually like their regulators. They like the comfort that comes along with knowing that a regulator has given something its stamp of approval. So I think it's important for projects, even with a very strong philosophical bent of self-custody and other things, to still work with regulators and make sure that whatever they're doing is not going to come under attack, because you're just going to alienate a big customer base if you do that.
Couldn't agree more. And I think the one last comment I'll make on this as well is the way we think about this is less about maximizing for decentralization. To me, that's never really made sense. It's a means to an end, not an end in itself. The end I personally kind of describe with Blockstack is this idea of a user-centric web, a digital world that is essentially conforms at every point to how I want my experience to be, where I want to take my data, how I want to use it. And I think that you can start thinking of very interesting ways where you can minimize the degree to which someone having some custody or ability to help you get custody of your account, let's say again, without necessarily being a complete situation like we have with Coinbase at the moment.
Yeah, that's a perfect example, because what these protocols give you is that entire spectrum of choice, where if I want to, there's nothing that can stop me from going to MakerDAO and getting a loan against my digital assets right now. But at the same time, if I'm a retail user, I probably want to go through some regulated interface.
But let's changing gears for a second. I feel like, Clay, we're going to get to you, I promise.
It's the chair.
You're in the stepchild chair or something. So let's think about it. We've been talking a lot about the chasm between full-scale consumer adoption. From my world over on crypto Twitter, I feel like people are paying so much attention to, when is an ETF going to come online? What's Wall Street doing? What's this bank doing? Is Citi going to launch a derivative tied to crypto? All these things that at the end of the day you think would be antithetical to the type of work that you guys are doing. When you think about consumer adoption, and even we can talk about enterprise adoption too, is it how do we make these tools make more sense and work better for people? Or is it capital formation and liquidity and getting Wall Street in, or are they equally as important? What do you think, Richard?
I think they're equally as important, and you've really got to take an opinion. A product I'd actually love to show you all now is something called the Berner Wallet, which runs on a network called XDAI. So if all of you just go to xdai.io on your phone, and we're all gonna just hand you bits of money, and you can start passing it around and see this thing working. Because it's one thing to kind of talk about a stablecoin, and it's another thing to have $1 in your browser and start sending it to friends. And even if we're really boring panelists, we're about to give you money, so hopefully you'll enjoy that experience.
And this is a use case. Explain how this is provides an example of how.
Yeah, I assure you we don't pay Richard too, because this is using our product DAI. But basically what this is about to do is send you a digital dollar that you entirely custody on your phone. And the private keys to the wallet that you're about to generate exist exclusively on your phone. And that's why we call it a Berner Wallet, because you really wouldn't want to put much money in here at all. You should think of it like the wallet in your pocket, and because of the current state of technology, you should probably imagine you're not walking in a very good neighborhood.
How does this help with adoption, though? Or how does it bridge the chasm?
Well, as you're about to say, you can receive money in 2 seconds without any sort of interference. There's no key entry, there's no generation, there's no writing down 12 words.
All the headaches that are typically associated with
Exactly, yeah.
maintaining cryptocurrency.
Yeah, there you go.
Well, let's take a look.
Send 95 cents to someone else.
Is it happening?
I think it's happening slowly.
Slowly but surely.
Why don't we do more questions?
Yeah, sure. Let's Clay, you had a burning thought. Let's
Yeah.
get to that.
Here.
Go ahead.
Yeah, so if we're talking about end user adoption in terms of consumers, institutions, and I have a couple thoughts there. I think first, we need to focus a lot more on developers and making the tools and services easier for them to access so you can have iterative products that are released that are forks of each other that build upon the experiences that other products have created so that you can lower the barrier to entry for users. Because at the end of the day, the only thing that's going to drive end user adoption is abstracting away a lot of the complexity that even you see with XDAI, such that consumers will want to use it. And then from the institutional side, I think one thing that is interesting in the context of open finance is the paradigm shift in counterparty risk. And what I mean by that is when you think about someone like a liquidity provider in a traditional equities market today, the idea of counterparty risk is actually one that they take comfort in terms of they can pick up the phone and call the bank on the other end and resolve any issues that they have should something go wrong. However, in the open finance world, the counterparty risk shifts to the smart contracts where all of this logic is being executed. And so one thing that we need to do both on the regulatory side from an education perspective as well as the institutional side is work to educate individuals on one, what that counterparty risk is and how can you get comfortable with it, and two, start to create legal frameworks for what recourse looks like should something go wrong. Because all of these smart contracts at the end of the day go through audits and they're, everyone talks about it being a trustless system. There is, in fact, trust that's put in these smart contracts. And so legal frameworks.
How are you doing that tangibly at 0x? What does education look like? What does making the product offering, the product suite, more appealing to the average institution, the average consumer on the ground level?
Yeah, so is it on? All right. So when you think about things like counterparty risk or custodial risk that exists in the centralized exchange market today, one thing that institutions love about decentralized exchange is the fact that you can actually roll your own custody and manage your own security, which reduces the risk of something like an exchange getting hacked and your funds getting stolen, because crypto, unlike most other assets, is a bearer instrument. And so one thing that we do is talk a lot about that and the optionality that it gives institutions, which they're a big fan of. But again, the conversation always shifts back to counterparty risk and what is my recourse should there be a bug in a smart contract. And there are things like insurance funds that exist with centralized exchanges today. Like BitMEX, for example, takes a small fee per transaction and pools it into an insurance fund such that should they get hacked, they at least have some way to make users whole. And how that exists in the open finance world is sort of to be determined, but those are the sort of frameworks and concepts that we need to think about in terms of institutions.
Completely agree with the education. Developer education for us is huge. Obviously, a little bit different of a use case. I think one of the big ways we're seeing success is we have this tutorial called Zero to dApp. So I am not an engineer, and I got through this in 45 minutes, and I had a decentralized application that I created. So I think it's creating aha moments, and what Richard just did is a great example of that. That is an aha moment that is enabling something that you weren't able to previously do in a way that's pretty slick. And that's the other piece I would add on top of the education, is not only do we need to educate people, but we're still very early in what's being enabled here. For Blockstack, for instance, specifically, one of the key innovations with us is we have decoupled the application layer from the data layer. So we started to see some pretty neat experimentation and use cases that have come out of that, but there's so much more to be explored there around what can you actually do with that decoupling that's not possible currently in the digital world. We're starting to see applications like BitPatron was one that was built in about 4 days by a Brazilian team 2 weeks ago. If you go, it's bitpatron.co. fully Lightning Bitcoin-enabled Patreon alternative using us for data and identity. That's a good example where it's not necessarily something completely novel, but the way that it can manifest itself in this world and the properties that can have where creators can own their audience along with some other features does actually make that a pretty interesting innovation.
Richard, were you able to send someone some sense?
Yeah, I mean, I've given a bunch of people $1, and they're all passing it around with 5 cents less each time.
It's like a mini lightning torch.
Yeah, it's so I want to give a shout out to the person who created this product, Austin Griffith, and then also the networks that are running beneath it. And so this is running on the Proof of Authority network that is a kind of high-speed sidechain to Ethereum. And then that is connecting through a bridge to Ethereum. And then Ethereum is the kind of base layer protocol. And so what you're seeing here is a really well put together product that's connecting to a sidechain that's connecting to Ethereum. And so it's quite deep, right? The stack is already relatively deep. Now, XDAI was recently running at an event, and I believe it was roughly $40,000 of transactions occurred, and the transaction fees in total were less than $1. And so that's where we're going to start to see real adoption. That's how you cross the chasm, is when you completely blow the credit card networks out of the water and have a kind of global open source network. That is when I think people will really start to pay attention, because it's saving businesses money and it's saving consumers money. And that's what I'm excited about.
But it's happening, it's clearly going around quickly, but if we were to have the same level of folks using it as the credit card companies, obviously, tons. My phone?
Microphone.
Oh, microphone. I thought you texted me or something. There's a couple hundred, some odd people in this room. Obviously, a lot of these networks have had scaling issues. Scaling issues have been in the headlines. Is it possible, and what will it take for any sort of network to handle the amount of transactions or the amount of volumes as a Mastercard or Visa?
Well, the network people are using right now, XDAI, that can actually scale up to about 5 million transactions per second. So that one doesn't have scaling issues, but that's because you're making a major trust trade-off when you use this network. It's not that hard to hack. But at any time, you could pull those funds that you just received back to the Ethereum mainnet, and then they'll be just as secure as any other token on there.
So there you go. There's pluses and minuses to everything, at least that's out there. What's the crown jewel, and what's it going to take to really, if we want to talk about giving Visa, MasterCard a run for their money, what is it? What's it going to take?
Well, first we have to realize what Visa and MasterCard do, and payment processing is a very small part of it. It's really giving you points and then charging merchants the interchange fee a whole circuit of a business model there. I think a lot of people in our space have to wake up to what they're actually competing against. Just building something that does a huge amount of transactions. I call this the dApp falls in a forest phenomena, where you make a dApp, it does something that you think is really cool, but nobody else thinks it's useful. So you have to really focus on what you're actually solving for.
What's the biggest example of that, you think?
I wouldn't do that, Frank.
I will.
You will. You can do it next.
I think EOS is the biggest example of that, where they have consumed so much capital and produced something that we don't actually need. Because all of the scaling challenges are being solved in interesting and novel ways. I would be fine with EOS if they'd raised 40 million, but once they went past the 1 billion mark to somewhere around the 3 to 4 billion and produced pretty buggy software, quite frankly, they can jog on.
Yeah, I actually want to tie this back to your last question, too, because you asked what was more important, ease of use or the liquidity portion? And I'm entirely on the liquidity portion side of that equation. You could build something that's incredibly easy to use, but if people don't have the utility of actually using it, then who cares if it's easy to use?
And that's the decentralized exchange problem.
Well, for now, but I think decentralized exchanges are going to become much more useful when they have the liquidity, which is something that I work on every day. We have to go out there and convince market makers that DAI is an asset that they want to trade. We have to go out there and convince people like Josh that he should whitelist our contracts so that we could borrow against his security tokens and create an ecosystem.
And how do you, Yes. Thank you. The conference consultant back there. How do you, how do you convince market makers to help you with the liquidity problem? Is it rebates? Is it something else? How do you do that?
I mean, you just have to convince them they can make money. And they can make money. DAI market makers make a ton of money today.
There's your scoop, guys.
Yeah, and we actually just rolled out a market making program for 0x and working to convince new market makers to come online to provide liquidity for assets. And what we talk a lot about is, one, what I just touched on, the aspect of non-custodial risk or mitigating the risk of custody. But the other thing that we talk about is the greenfield opportunity, because if you look at centralized exchanges today, we've kind of reached peak market inefficiency. We've now reached peak market efficiency, and so what that means is spreads are extremely tight, so the profit opportunity for market makers is pretty low. But where you look at decentralized exchanges, those arbitrage opportunities exist. Spreads are sometimes even 10x what you see on a centralized exchange. So from a market maker, you better be licking your chops to go for that opportunity. So we talk a lot about that. But we also talk about the long tail of assets that can be addressed with decentralized exchange, because centralized exchanges at the end of the day are a single end user interface that's really good for solving one use case, which right now is trading ICO tokens. But if you think about exchange as a functionality that sort of transcends different use cases. So ICO tokens are one thing, security tokens are another, prediction markets are a third, and even gaming and non-fungible tokens can exist. And market makers have opportunity across all of those. And with that as well, too, because these markets are inefficient at the moment, those arbitrage opportunities are pretty vast. And you see a lot of smaller teams getting into the space. And if you talk to larger ones like an Amber AI or an Alameda Research, that are some of the largest centralized market making firms in the crypto space today, they have 4 or 5 developers that are working full time on looking at open finance and trying to understand from an R&D perspective, what are these opportunities and how can we take advantage of them so that we can be on the bleeding edge. So it'll be a slow burn, but we're really bullish on the opportunity for these liquidity providers.
Thank you. So obviously, decentralized exchanges have had a lot of issues over the past year. Volumes are down 80%. You talked about the opportunity outside of just moving shitcoins back and forth. What about lending? Centralized lending has been really hot. Genesis Capital, right? They're making a ton of money hand over fist with lending. Dharma recently announced its fundraise. What about lending? What about other areas of open finance? If we're going to provide the audience with something to look out for the next 6 months in open finance, what is it?
I feel like I have to take that one, right?
Yeah.
So yeah, just so everybody knows, Maker is a lending protocol at its heart. Currently, we only have one asset that you can borrow against, but you're able to take an indefinite loan against your Ethereum at 1% annually right now. So that's quite lower than what anybody else will lend to you at. And this is going to continue for every asset that we add to the collateral portfolio. So something we're going to offer to decentralized exchanges that are, for instance, building on 0x is a margin button, where, currently if you're running a centralized exchange and you want to get margin, you have to basically custody all that risk yourself. You have to manage the lending and the borrowing, and half the time it blows up. With our system, you're abstracting all of that away to the maker holders. So you could just basically have a little button that shows you your total purchasing power based on your assets, but you retain full custody of your keys and you never leave the decentralized environment. Did you want to?
There's this absolute psycho who I look at every day, who has a CDP, and it's called CDP 3228. And he currently has $6.2 million of Ethereum locked up in it. And he took out a $3.8 million loan. And if ETH drops to $127, then he's going to get a 13% fee. So he will lose, I think, $600,000 or something. And I just enjoy watching this nutcase update his CDP on the regular, put money into it, remove it, get liquidated, pay huge fees. This person just doesn't care. And the reason I just think this is kind of amazing is this is the beauty of open finance, right? You can analyze the chain, look at the data, and this is what we do in Balance, and the product we're releasing is give people access to this information right on your phone. But imagine going to your bank and saying, hello, I've got $6 million of Ether and I would like to borrow, $3 million or a couple $1 million of cash. They're just going to turn you down. Whereas if you go to the MakerDAO, and I encourage everyone to do this, not with 6 million, but with just $60, and just open up a CDP on your phone, and it takes 10 minutes, and then it's done. And that, I think, is the power of open finance, is that it's so much faster than the banks, and it's so much cheaper than the banks, that we're just going to blow them out of the water, and they will then join the system and help it grow. And I think that is the exciting opportunity.
Great. I want to open up the panel to questions, and just as a friendly reminder, there is a difference between pontificating ad nauseum and a question, but I'm sure someone will forget that, and we'll find out soon. So, questions? Yeah, sure.
So what are you guys aware of that Visa and Mastercard are doing in terms of looking at blockchain stuff?
So the question is, do you guys have any inside information onto what Visa and MasterCard are doing with blockchain?
Our team has talked to their innovation labs. They're very interested, but like most massive companies, it's at a very superficial level, and they're going slow, as they should.
Yeah, I believe the chap is Coy Sheffield at Visa, and he's constantly involved in Telegram groups, constantly on Twitter, like learning from the community, and really excited. But I am waiting for him to get so frustrated that he wants to leave and take a job in the industry, because I think that they're not going to be the first to this. They're going to kind of carefully and deliberately follow. But they're not stupid. Everyone's aware that this is happening. It's just a question of, and I like to think about it is Wells Fargo doesn't need to work on open finance. They've got amazing infrastructure, millions of customers, it's all good. Balance is a microscopic organization that may or may not die in the next 2 years. And so I will do absolutely anything to make sure that is not the case. And that is the kind of like hunger and like attention to opportunity that a larger organization can't have. Whereas it is my entire focus to try and make this thing grow.
And just to expand on your question from Visa and MasterCard to all enterprises, the decentralized applications they deal with have to be better than the centralized ones they deal with. So, for instance, I was talking with a bank yesterday in Omaha, and they were like, well, we go to JP Morgan right now to get lines of credit to lend out to people. What could you offer us? And when they found out that we can actually offer them a lower rate than JP Morgan, then they were interested.
Any other questions? Just to get to as many as possible? No questions. Yes.
Just given you mentioned JP Morgan, can I get your thoughts on the stablecoin that they released and how that plays into it?
We are so happy about that. I'm not kidding. We're actually happy about that.
The stablecoin.
The question was to comment on JP Morgan's release of a stablecoin, which is a slight competitor to our product because it is $1 on the blockchain, but it's their own private blockchain, so it's not a direct competitor. But we are very happy because, as head of business development, I'm sitting there every day going, how do I get enterprises to speak my language? Because once they speak our language, then they'll know that our product is better. But it's very difficult for them to spin up an Ethereum node and start operating on an entirely different system. Well, JP Morgan just got half the world to do that for us. So that was great.
Does anyone else have any thoughts on that?
Not necessarily on, it's JPM coin, right? Is that? Yeah, it's very inventive. No, I think to expand it even beyond the other kind of financial institutions, we have seen exactly what Richard's talking about with interest in the true enterprise for over a year now. I've spoken to everything from, smartphone providers, folks like, Apple's or Samsung's who are very aware and have been looking into this for a very long time, to other kind of industries that you wouldn't necessarily think something like identity management would be super important, but automobiles are actually a perfect example of that. I think pretty much every major car maker right now has been looking into this technology, not just on the identity side, but on the data side too, as cars become smarter. And I mean, there's models that are hackable today. So I think we're seeing this across.
Yeah, I mean, I remember in 2014 when Vitalik crashed on my floor and was telling me about, I want to build a decentralized computer for the world. And, there's just this alien-like voice. And he was telling me about these things. And to see the project go from just a kind of feeble idea in his mind to, the likes of Samsung and HTC actually developing hardware to support this idea and continue it forward is absolutely incredible. So although it feels like we've got a long way to go, it sometimes helps to look back and think how far we've come.
Yeah. And then with that, I think that's a great way to end.
Yeah.
Thank you. Great way to end. Thanks for listening.
Yeah.
Applause for our panelists.